Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. First Solar reported results this week, and I think there was a lot to be impressed by. As a lot of other companies in the solar industry face a number of pressure points, First Solar just seems to be gaining momentum. The company actually announced more expansion of its capacity, announced great margins, and I think the tailwinds seem like they're going to be behind this company for quite a while. So I want to dig into the news and some of the results. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, below if you like this video. Let's go first to the announcement that came out before results. And this is another capacity expansion for First Solar, adding 3.5 gigawatts of expansion available in 2026, $1.1 billion investment. This is the company's fifth facility in the US. For a long time, this was one of the only major solar manufacturers in the US. That's starting to change with some of the incentives that were put in place. But you can see that First Solar continues to expand, and a lot of these solar panels will end up actually being installed in the US. Now, going to results, I wanted to start with the income statement because there's a few things that just jump out being incredibly impressive. Sales growth is decent, $621 million a year ago, $811 million this year. But look at this gross profit number. Management has been talking about some projects and sales that were a drag on gross profit over the last year, but that has absolutely reversed. 38.3% gross profit. These are numbers that we haven't seen since the early 2010s, when First Solar had far lower costs than a lot of their competitors were reporting gross profit margins of nearly 50%, sometimes in excess of 50%. Despite the fact that there was even some litigation losses, net income more than tripled to $171 million. Just incredibly impressive numbers from an income standpoint. But this wasn't all that surprising when it comes to the company's guidance. Guidance is unchanged for the most part for the full year, $3.5 billion. In revenue is what's expected, gross margin of $1.2 to $1.3 billion. Look at this margin they're expecting in excess of 30%. So obviously expecting some very good margins in the back half of the year. Operating expenses are going to be up a little bit, but capital expenditures are actually going to be down. And as a result, cash is going to be up to a balance of $1.5 to $1.8 billion. That's in part because of the lower capital expenditures, in part because financial results are much better than previously anticipated. So really good guidance, really good growth. As we look out even further than this year, you can see that there is now 77.8 gigawatts of backlog for First Solar. Year to date added 13.6 gigawatts, despite shipping only 4.7 gigawatts of product. One of the reasons sales can be so much higher is these capacity expansion. These are the 4 updates the management gave. The facility in India is expected to start producing product later this year. Alabama is expected next year. There's an R&D facility in Ohio. And then that recently announced expansion in the US is going to be in 2026. So in total, First Solar is going to more than double production. We should see continued revenue growth. And assuming the pricing remains strong for solar panels, which these bookings that they're booking right now, that should be the case, we should see continued profits for at least the next few years, given this big backlog. First Solar is benefiting from a couple of different things. One, there's the tax benefits the company is getting for building its expansions in the US and then just being a manufacturer in the US in general. Management said the gross margin is going to be helped by $660 million to $710 million this year because of those tax benefits. So that's something that was put in place with the IRA and is already starting to impact the bottom line. This is also going to help some of the expansions that are in the works already. But the other thing they're benefiting from is the tax credits for solar panels that are installed. Those credits were lifted and extended, and that has really increased demand for solar panels from a utility scale customers. That's what First Solar is primarily serving, is the utility scale market. And there's both rising demand for electricity, rising demand for renewable energy, and with those tax credits, that makes solar that much more cost effective. As one of the biggest manufacturers in the US that can take full advantage of those tax credits, that's really helped First Solar's demand and is a big reason that that backlog is increasing as much as it is. So right now, it seems like the momentum is all behind First Solar. The company has really caught up from a technology standpoint, something that it was struggling with just a few years ago, but that seems to be turning around. They're cost effective, efficiencies are improving, and the momentum just keeps getting better and better. So there's a lot to like with First Solar. I don't see any reason to sell shares right now. But what did you think of the results? Leave your comments in the comment section below, and don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.